sponsored by the Securities and Exchange Commission of Nigeria.
Hello and welcome to Ion Nigeria's Capital Markets. Our program reports activity on West Africa's oldest stock exchange and its broader capital markets. I'm Wole Famirewa. Housing for all is something Nigerian politicians have touted for decades. However, according to the World Bank, Nigeria's housing unit deficit has risen to a staggering 17 million units. Nigeria's real estate sector is our focus today as we examine the latest initiatives designed to tackle the problem and highlight the role of the capital market in the process. The rapid growth of the real estate sector often follows economic expansion and urbanization in developing countries. The growth often cuts across commercial and residential property. However, many observers note that the growth of the real estate market in Nigeria, Africa's largest economy, lags that of many other comparable countries.
The real route to the slow growth in the Nigerian housing sector has been when one looks at the value chain, right through from land titling through to development, construction, and the selling, and of course the creation of mortgages out of that. There have been very, very weak links in the chain. The environment has not been very conducive for housing to fester and grow, and of course for mortgages to result from that. And so the essence has been to create an environment that is conducive by addressing those challenges.
It must be noted that real estate is a key economic indicator and denominator of how well an economy is performing. It's also a major driver of socioeconomic change. Major economies around the world have pivoted their entire economy on one single strategy, the provision of quality real estate in major cities that they developed across their countries.
Properly analyze real estate, you have to sort of break it down into the different components. You have the commercial real estate, which involves properties or commercial office blocks, which is sort of doing quite well right now. You have the retail real estate, which is, I would say, is the fastest growing right now. Malls and shops, basically, and markets. I mean, so that is sort of growing quite fast now. They have the hospitality, which about 2-3 years ago, everyone was saying that there was sort of a scarcity, but now everybody forecasts that there will be a glut soon. Then you have the residential, the housing real estate, which a lot of internationals are running away from, but a lot of locals are trying to fill in the gap.
The size of the population of Nigeria at 170 million, an urban population of growing towards 60%, and we also have a massive and growing population, very young population. There's need for massive infrastructure and housing and commercial development. In other parts of the world, there are very few countries of our size. If you start to think of that, you have to look at other economies in the West, and those economies themselves have taken a long time to get to where they are. If you look at developing nations, only Brazil you can compare. And in terms of Brazil, what they have done is they've made a conscious effort to increase the urbanization and stock of housing and commercial properties across their country. For Nigeria, we have not gotten there at all. And in fact, we have a housing stock of 12 million compared to a population of 170. We are nowhere near what is adequate for the population.
A range of issues has stunted the growth of the real estate market in Nigeria. The Land Use Act, a legislation that vests ownership of land across Nigeria in the hand of state governors, is a challenge that complicates the transfer of title and to varying extent makes land for development unavailable or very expensive. Other challenges include the current high interest rate environment that increases funding costs for developers and investors.
When faced with an option as to whether to allow the economy grow or to stop or reduce inflation, they usually focus on inflation and exchange rates because that is what they're measured on. So you can't blame any central bank. But it's so fundamental. Somehow, somewhere, there has to be an equation that says, look, the economy has to also grow. If you're going to do a trade-off, it should not be that the economy should not grow. Interest rates at 15, 16, 17% is a no-no. Too many things will not happen. So first and foremost, I think that interest rate has to come down materially. Then it allows investments to happen, it reduces the opportunity cost. I mean, it just frees up so many things. So I think in terms of monetary policy, I think somehow the focus should sort of change from just inflation targeting constantly to actually allowing the economy grow. Let people be able to access funds, use these funds without it being sort of a chain in the neck.
If you think of real estate as almost a manufactured product, you need to deliver supply, the supply needs to be taken out. On the supply side, developers cannot borrow money at 20-25% to deliver, because every 4 years they have to double their cost.
Look at the cost of funding for the person that wants to pay a mortgage for 25 years and it's 22%. Nobody can do that. Nobody can comfortably do that. However, these are real challenges.
The biggest problem for particularly what I would say international developers, because that's probably one of the worst things to look at, is skill sets. In the country at the moment, there are very few developers that have the skill set to create or manufacture products to international standard.
Several attempts have been made to address the relatively slow growth of the real estate sector. The Federal Mortgage Bank was created in 1956 to develop the housing sector by encouraging the growth of viable primary mortgage institutions. However, almost 60 years on, less than 30,000 mortgages have been created in a country that is home to over 170 million people.
Some of the policies in the past have tended to address one area or the other and not the entire chain. You need to address the entire chain. And so the difference in perspective now is that the entire chain is being addressed right across from, as I said, from land to titling to construction, and of course to creating mortgages and refinancing those mortgages and even beyond, and bringing in capital market as part of the perspective. So that is a change that is taking place now, and that is where NMRC comes in.
The Nigeria Mortgage Refinance Company is the latest initiative designed to support the growth of the housing sector.
NMRC, full name Nigeria Mortgage Refinance Company, it's a liquidity facility. We're not a mortgage bank, and our role is not to create new mortgages. We are a liquidity facility to refinance mortgages. And so our role is a secondary market role, but we understand very well that in order to be able to refinance mortgages, the mortgages must exist in the first instance. And so there is interest from our perspective to see that mortgages exist, and that means we also are interested in having properties developed from which mortgages can be created.
Investors and developers are excited at the potential of the NMRC to catalyze the growth of the residential real estate market.
I like the NMRC because it addresses part of that problem. One is availability of long-term funds. I think more organizations should come and address that problem, availability of long-term funds.
The capital market is the biggest link and enabler of our change that we're envisaging in the future, where people are taking a long-term perspective. They're supporting a sector that will create long-term opportunities. And so I think the capital market plays a critical role. Now, finding how to connect that link is what we're seeing more recently with the creation of the NMRC. If you look at the NMRC that has just been formed, that we are all excited about, you can tell that a crop of people that were really interested in doing something great committed to that innovation. It's an innovation. It's a gap that has been waiting in our own country. And finally, somebody has just made it happen.
The NMRC has the potential to catalyze the construction and property development sectors and will also drive the development of the capital markets.
What we're essentially doing is also engaging with developers, with even international developers and international financiers. And we have signed an agreement with an international player to come in and take us even beyond the refinancing aspect. And that agreement also brings with it very, very significant international funding for developers. They'll be engaging with developers. I'll leave them to speak in specific terms, but they'll be engaging with developers and they will be financing construction. So that would really kick in housing activity and the development of the housing stock, which is part of the challenge. We need to seriously address the 17 million housing shortfall that is in the market at the moment. Their role is pervasive in the industry. They're even involved in securitization, but they will be using international developers who would partner with Nigerian developers in accelerating the development process. And here we talk about bringing development that are affordable, that are of good quality, in timely manner. Some of the recent data from the CBN shows that the mortgage market, the residential mortgage market, is about 118.5 billion naira, 2013 data. If we were to make that grow to about 2% of GDP, that would raise the figure to 1.7 trillion.
After the break, we continue our look at Nigeria's real estate market and discuss innovations that are helping to redefine the residential property market. We also discuss the role of the capital market in fixing Nigeria's housing problem. As Nigeria's new government, led by President Muhammadu Buhari, settles down to work, it is expected to unveil an economic development program designed to not only diversify government revenues away from oil, but to create much-needed jobs for the millions of unemployed Nigerians. The potential economic impact of a vibrant real estate sector is one reason why the new government should pay closer attention to the industry. Richard Young is the CEO of Lekki Gardens, an innovative residential property development firm that he says has created jobs for over 10,000 people.
Real estate can ignite changes in the financial sector because you need to provide loans for construction, huge infrastructure. You would need to provide mortgages for families, and so you can galvanize the whole economy around mortgages, around construction financing. But that's not all. It creates massive opportunity for employment because you need a lot of people to create infrastructural change. From architects, professionals, you're talking about architects, you're talking about quantity surveyors, you're talking about accountants. You start looking at the laborers on site. You have to train people to be able to do this work, so you need to teach people, provide institutes. You have to look at civil engineers, architects, and a whole lot of important people in our economy. So real estate doesn't just provide employment, it provides employment across various stratas, across various sectors. And these sectors have sort of connected effects, interrelated effects. So you're taking care of construction, but yet you are creating employment, and then there's finance. You unlock a lot of sectors when you start thinking about real estate, and that's the importance of real estate in an economy.
By the time you start infusing and regenerating different parts of country, whether you put infrastructure there, the whole economy almost doubles by itself. If you think of Agbara Estate, when it was created years ago, there was nothing in that part. But as soon as you had employment, residential, the whole infrastructure that's created in that area has created it. If you also look at Lekki, the whole of the wealth of Lekki has been done by private sector. As soon as that infrastructure went, the road network went, everything there, predominantly private sector. That's what real estate and infrastructure brings to the economy.
Real estate gives families the opportunity to be disciplined. because you need to sacrifice towards a goal, a goal of owning an asset, the pride of the family, people begin to develop saving culture. That has spurred a lot of growth in places like China and India, because people now know that they can save towards owning their homes and unlock funds for their children's education from that home, and the children come back to pay down the mortgages. So it's a cycle of wealth creation and development that has psychological potential, has socioeconomic benefits, has family ties development, because somebody that owns real estate is a disciplined person, is a responsible person, is somebody you can count on. It develops character. Owning real estate develops character, business acumen. So when you look at the spectrum of change that real estate can deliver, you begin to wonder why it's not the ultimate focus for a country like ours.
For many, many years, we used to have things like Yaba Tech, Ibadan Polytechnic, where people trained and had the sort of skills. But those are gone. And I think we have to reverse that. The government needs to encourage handiwork, because not everybody's going to go to university, and not everybody's going to, a lot of people make money by using their hands. That's something that needs to be encouraged as well.
Challenges are often a breeding ground for innovation, and property developers like Richard are finding ingenious ways to tackle funding and other challenges. The government is also being challenged to become more flexible in its approach to land and infrastructure allocation, with an eye on the long-term benefits.
What the FCT did that is even brilliantly different is that it now focused on partnering with property developers, partnering very aggressively, not just partnering, but partnering very aggressively in creating standards, in saying this is the kind of societies we want you to build. We want you to build works. We want you to build underground central sewage systems. We want you to build good roads. We want you to build good drainages at your cost. Develop this area, and we would allow you to draw value by selling the land that you have developed, that you have put infrastructure in. That kind of partnership has created a lot of change in Abuja. And we want to see things like that happen in places like Lagos, in places like Port Harcourt. We want to see it happen across major states in the country, because once this is activated, a lot more states will join. But then when you look at our business model, in terms of how we sell before we build, which is an off-plan sales, it's always been there. But we committed to that, and it created our change. Equipment. We've done that a lot in our business, where we start thinking, why not, must everything be labor intensive? Why not bring in some machineries that would help you? And so finding the perfect balance between labor-intensive production and fully mechanized production systems for building houses, for delivering value in itself is an innovation. And when you look at how we've approached our sales systems, where we commit a major part of our revenues, not a major part in itself, but in terms of a sales cost, we decided to go to look at real estate as a retail product rather than a corporate product. And so we came down to lower levels of this. We came down and started advertising more aggressively the product. And these kinds of things have created a lot of change. And those are the kinds of innovations we want to see in the sector. People looking for smarter ways to sell, smarter ways to finance, smarter ways to build value, and smarter ways to build capability. I think those are the innovations that we're seeing in the sector that is creating a lot of change.
Over the next 5 years, I actually forecast that our REITs might be able to beat FGN on a risk-adjusted level. But I think the system has made it too painful. You should not spend 15 years in this industry before you figure out a way to beat FGN, you know? But yes, there are ways. You probably have to go into some level of development. You probably have to do your market analysis well and target a particular segment. Have an interesting mix of rental and sales. Because the truth is that to beat those kind of returns on a yearly basis, you have to sell frequently.
Real estate investments are fundamentally long-term in nature. As a result, Nigeria's capital market is playing and will undoubtedly play a key role in the development of the sector.
I talked about the 30 trillion that is potentially there, looking at the pensions, looking at the banking sector, and looking at the insurance sector. What the capital market does is to help unlock that dead capital. That capital is as good as dead if it's not utilized effectively. And so the capital market really serves as a link that brings investors and the investment opportunities together, put in simple context. And it has two components to it: the primary market in the context of housing, which is the market that addresses the construction and the creation of the mortgages, and of course the secondary market, which is where our key role is, where we raise money specifically from the capital market for the purposes of our activities.
Real estate and infrastructure development, which is what real estate basically is, development of the infrastructure of the economy. It needs something that only the stock market has: patient capital.
Real estate is capital intensive, and one of the ways to get that is either by way of IPO of companies, either development companies or investment companies, but the other is actually recycling of debt. Securitization needs to play a big part in how we play, because long-term capital, which comes from ability to recycle and cookie-cut debt, is quite fundamental. And I think securitization and IPO is the market where capital markets can play. Shifting gears, we are looking at the REITs, we're looking at the bond market, part of the capital market, private placements, and then finally going public. And we have an 18 to 24 month plan to achieve most of this. So it's an important facet for our business. It's not just a facet, it's a strategic imperative. As a business, we've always played long term. We've always believed in long term, but we had to start our business as a private entity. But this is the truth about going public. It's not just about going public. It's first of all about being public. You must build your business with an understanding that it must operate first like a public company in terms of its responsibility to customers and to shareholders, in terms of its responsibility to the community and the society, in terms of its responsibility to its staff, in terms of its responsibility to its customers. You must operate like a public business. And so for us, it's more fundamentally, how do we continuously build our business to act like a public company, so that as soon as we are grown enough to connect, which is what we're trying to do, we would be able to, we won't be becoming a public company so that we can cash out, but we'll be becoming a public company so that we can do more.
Nigeria's property sector has tremendous potential for growth. However, it will take a consistent focus by the federal and state governments on creating an enabling environment that makes building construction cheaper while making long-term funds more affordable for property buyers. The capital market will provide a platform for issuers to raise funds, and reforms in the pensions and insurance sectors provide a stream of long-term capital for these projects. And that's our show on Eye on Nigeria's capital market for this month. Remember that you can find this and past editions of our program on our website, www.cnbcafrica.com. Until our next program, I'm Wole Famrewa, wishing you a profitable investment experience in Africa's largest economy.